All right, hi everyone. Welcome to today's webinar brought to you by IronFX. Today's webinar series is going to be on breaking news and setups. All right, thank you all for tuning in. I just want to make sure all of you can hear me loud and clear and see my screen as well. You should be looking at the first page of the presentation slides, IronFX webinar series, breaking news and setups. Right, as we go along the way, do not hesitate to drop your questions or requests in the Q&A box or the chat window as well. Be more than happy to go through to answer your queries or to go through any requests that you may have for analysis on any commodities, currency pairs, or even the indices, right? All right, okay, so I assume audio is loud and clear. Right, okay, if not, all right, let's uh, get, get things going. And we'll start off as usual with the disclaimer. I do take note of the risk warning that comes with trading margin and Forex, right? So all the products here on IronFX are traded on margin and carry a high level of risk. It is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Also, do take note of the disclaimer. The information in this webinar should not be considered as investment advice or an investment recommendation, but instead only educational material. Right, so my name is Ketan Ramachandra. So this webinar series is brought to you in a special partnership between IronFX and Everest Fortune Group, where we have been a finalist for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, so we'll look at some of the key economic events coming up today. We've got the PCE price index. This is an inflation measure. This is the Federal Reserve's preferred gauge of inflation, and it's definitely going to impact the demand for the dollar. Today, we've also got unemployment claims coming up as well around the same time. Both of them will be released at 1:30 p.m. GMT time. Right. So this is the calendar uh, for today and tomorrow. I'm on GMT time. So as you can see, today, Thursday, 29th of February at 1:30 p.m. We've got the PCE price index that's going to be released, and we've also got unemployment claims. So both of these data points are going to be released at the same time, and it could have a big impact on the direction of the dollar later today. And also do take note of all the other events that are coming up tomorrow as well. Right, we've got manufacturing PMI and services PMI data out of China. This could impact uh, the price of crude oil, right? If we see strong PMI numbers in China, so that's going to reflect stronger growth and would then translate to potentially higher demand for crude. So this could be an important news release for crude oil prices tomorrow. We've also got flash CPI data out of Europe, right? Similarly, this data, if this data continues to come in soft, that means if inflation continues to moderate lower, right, then this is quite likely to cause the euro to weaken. And then we've got the ISM manufacturing PMI up at 3 p.m. tomorrow, as well as FOMC uh, members speaking as well. So we've got a couple of FOMC members speaking as well later today at 6:15 p.m. as well as tomorrow at 3:15 p.m. All right, okay, so moving on to PCE price index. So this is going to be released today at 1:30 p.m. GMT time. So on the left, I have the PCE price index on with the headline PCE price index on the left and the core PCE index on the right. Okay, so this is the readings on an annualized basis. So as you can see, since April of 2023, the headline PCE index has moderated quite significantly, right? From going from about 4.5% to currently about 2.6% for in December's reading. Whereas the core reading, PCE reading, took a while to um, before it started to moderate lower. So it started to moderate lower in um yeah, probably June onwards. June onwards was when it's really started to ease further. Right now, with the latest reading, December's reading, sorry, coming in at 2.9% year over year. So on an annualized basis, PCE price index is heading in the right direction. That's great news. But If you look on the monthly, if you look at the monthly data, right, we actually see the for January's forecast coming in pretty strong. So as we saw last week, we had inflation data and PPI data out of the US, which signal uh, which came in hot, right? The numbers were hotter than expected, so we had a hot set of figures with regards to CPI and PPI data, which seems to suggest that inflation could be re-accelerating in the US. Because of that, market expectations for today's PCE price index is also likely to be coming in hot. So as you can see here, December's results here, we have the PCE, core PCE price index gaining 0.2%, which is here, right? So as you can see, October, November, it grew only 0.1%, but in December, it grew 0.2%. But January's forecast is now indicating an increase of 0.4% month over month. Now, this would be the strongest increase since February of last year. So we're expecting quite a strong increase for core PCE on a monthly basis. Similarly, when we look at headline PCE index, December's reading came in at 0.2% growth, right, month over month. And for January, they're expecting growth to increase to 0.3%. So as you can see, this would mark the largest increase in 4 months as well. So in general, inflation on a monthly basis seems to be picking up. And if PCE price index later today, shows shows inflation re-accelerating in the US, is very likely we're going to see demand for the US dollar pick up. That means dollar index is going to rise. And of course, we're going to see currency pairs such as the euro, the pound, Aussie, and Kiwi fall. We're also likely to see gold prices fall. And also we can expect currency pairs like the dollar CAD and dollar yen to rise. So do take note how today's PCE data could impact the demand for the dollar, right? Conversely, if the data comes in soft, right, if the data actually comes in soft, then of course demand for the dollar is going to fall. But that does not seem to be the case, especially after last week's CPI and PPI data out of the US, right? So we can see the forecast already reporting or indicating strong monthly numbers. So we are quite likely to see strong PCE data come in, which means uh, higher inflation, right? Higher inflation figures for the month of January, and this could ignite strong demand for the US dollar. All right. Now moving on to unemployment claims, right? So unemployment claims are a data point that measures the number of Americans who file for unemployment benefits in the US, right? So when you see a number that's rising strongly, as you can see the blue bars here in the first half of 2023, that would suggest that the US labor is potentially weakening, because when you have more people filing for unemployment benefits, that means the labor market is potentially getting weaker. Conversely, when you see unemployment claims trending lower, as we saw in the second half of 2023, that means there are less people filing for unemployment benefits, which signals a resilient or robust US labor market. So in 2024, from mid-January onwards, we saw a strong pickup in unemployment claims, which would seems to suggest that the US labor market could be softening. However, over the last 3 weeks, we have seen claims trending lower. Not only were they trending lower, but if they were actually low, they actually printed lower than the respective forecast. So when you have a figure that comes in lower than the forecast, this would typically signal bullish demand, or this would signal as a bullish. This would tell us it's a bullish signal for the US dollar. Similarly, when you have data coming in higher than the forecast, as what we saw in the third and fourth week of January, that would signal a potential bearish catalyst for the US dollar. So as you can see, last week claims came in at 201,000, which was lower than the forecast. I believe the forecast was about 290,000. This week's forecast is going to be 209,000. So how can we interpret this data, right? So do take note, forecast is 209,000. So if the actual result comes in greater than 209,000, that means there are more people had filed for unemployment benefits, right? Which means this is typically going to be bearish for the US dollar. So that means currency pairs like the euro, pound, Aussie, Kiwi will rise, and we can also expect gold prices to rise. Similarly, if claims come in less than the forecast of 209,000, that means there are less people filing for unemployment benefits. So this signals a robust US labor market, which then translate into and which usually or typically would function as a bullish catalyst for the US dollar. So that means currency pairs like euro, pound, Aussie, Kiwi are going to fall, and gold prices would also fall together with it, right? So do take note of how we can interpret this data later today. So we've got two sets of data coming up. It's going to be very important later today at 1:30 p.m. GMT time. Do take note PCE price index data. If this comes in hotter than the respective forecast, it's going to create strong demand for the dollar. Similarly, if unemployment claims continue to trend lower, and especially if it comes in lower than the forecast, right, this is also would act as a typical bullish catalyst for the US dollar. All right, so with that, let's dive into the chart and trading view. And if you have any questions or any requests for any analysis on any other currency pairs, do let me know. I'll be more than happy to go through the analysis with you. And of course, so we'll start with the dollar index, right? So we'll start on the dollar index, and then we'll make our way down. We'll work on some of the major pairs, then we'll look at gold and oil as well. And of course, if you have any requests for any analysis, please do let me know early so we have time to go through the analysis together. All right. Okay. All right. So here I'm on the uh, daily time frame for the dollar index. So as you can see, since the beginning, or rather the end of January till mid-Feb, for the period of 6 weeks, the dollar was in a strong bullish trend, right? We can see it was in a strong bullish trend, rising quite strongly, going from what is this, about 100.70 to as high as 105.12, right? And we can also see this trend line here. Price had bounced off this trend line once here, and then it did find a little bit of support, but it's finally broken through. So it does look like this strong bullish trend may be broken, right? As you can see, the descending trend line as price broke underneath the descending trend line, right? Now, where are we going to identify the major support and resistance levels, and what can we expect, right? But because we see PCE data coming up later today, as well as unemployment claims, so we do see a potential for bullish catalyst for the dollar index. So we could see the dollar index reverse today. All right, so let's start the analysis on the 4-hour time frame, knowing that dollar was on a strong bullish run for the first 6 weeks of 2024. However, the last 2 weeks, we've seen it pull back a little bit. Where could we find the next support level and resistances? Let's come and let's do that. And also let's try and see how we can identify potential entry and exit points for the dollar index based on the data that's going to be released later today. All right, okay, now I'm switching over to the 4-hour time frame. All right, I'm just making the chart a little bit bigger. All right, so I'm going to get rid of this ascending trend line, right? We can see quite clearly price has broken underneath this ascending trend line. We can also actually see a bullish channel, right? There was actually also a bullish channel here, right? We could see price trading within this bullish channel as well quite nicely. Of course, it didn't touch the upward trend line or the bullish channel every time, but you can see it. You can see this bullish channel actually play out quite easily, right? It's pretty obvious, right? Okay, so with that, let's try and see where prices could currently find support. So as you can see, the dollar index is trading around 103.79. It's pulling back as we speak. But however, if we do see a set of data with hot PCE numbers and softer unemployment claims, that could likely cause the dollar index to reverse and move higher. So when I do see a strong support level for the dollar index is this overlap level here at around 103.67, right? We can see price finding resistance here. Price finding resistance here on 26th of January, 29th of January, as well as the 1st of February before finally breaking higher. So this level here at 103.67 was previously functioning as a pullback resistance level. And once price breaks above it, as it did on 2nd of February, it's quite likely now that this level is going to function as a pullback support level, which it actually did on 22nd of February. Yes, of course, we can see this candle here, the wick actually extending well below the pullback support level, but you can see generally how this area here did offers pretty strong support, and it's more clear here last on this Tuesday, right? Just 2 days ago, price finding support once more before reversing to go retrace a little bit higher. Right, so we do see this level here at 103.67 as a major support. So if you have been shorting the dollar index, right, where I would suggest a suitable take profit level would be around the region of 103.67, right? So you can see price has failed to break below this level convincingly so far, but should we get uh, data that's going to suggest strong demand for the dollar, then we may see the dollar index reverse off this level. So do take note if you have any ongoing positions for the dollar index, do take note that the upcoming PCE and unemployment claims data at 1:30 p.m. GMT is definitely going to impact this instrument as well as others as well, other currency pairs as well. Right, so if you have been short the dollar index, right, as you can see, as prices rose quite strongly yesterday, but it found resistance in the Ichimoku cloud. So generally, when you see the Ichimoku cloud in red, it suggests the red Ichimoku cloud suggests a strong bearish momentum, and when the Ichimoku cloud is in green, as you can see here on from 11th of January till the 19th of February, this suggests that price is in a strong bullish uptrend, right? Is a strong bullish momentum, right? But of course, price can pull back. Nothing goes up in a straight line, or nothing goes down in a straight line. But generally, we can use the cloud as a good area. We can use the color of the cloud to help us identify the current momentum for this instrument, and also the bullish Ichimoku cloud, which means the green cloud, the cloud itself can offer areas of support as well. So as you can see here, price pulling back here on 11th of January, it found support within the cloud or just slightly above the cloud before bouncing to go higher. Similarly here, 24th of Jan, 25th of Jan, 26th of Jan, price finding support within the cloud before moving higher. But I said as I said, it doesn't mean it's always going to offer an area of support. You can see quite clearly here on 31st Jan, it actually broke through the cloud quite easily. And then again here on 12th of February, as prices consolidated and started to like move sideways, once again it found support just at the top of the cloud before going higher. Similarly, when the cloud changes from green to blue, green to red, it signals that the previous bullish momentum has reversed or has ended, and we are likely to see a strong bearish momentum gain. So as you can see, when prices rising yesterday on Wednesday, it ran into resistance as well. So green Ichimoku clouds can offer areas of support. Conversely, the red Ichimoku cloud can offer or present areas of resistance, right? So as you can see, price came into the Ichimoku cloud, it tried to break above it, but it actually reversed within the cloud and started to drop lower. So this action here, this price action here within the cloud, right, within the cloud would also signal to us that the cloud is indeed functioning as a major resistance zone for price, and it started to drop lower. So this would mean I have a potential short opportunity to enter for this trade. So for example, if you have been shorting the dollar index since 104, for example, right, do take note the region of 103.70 would be a good place to identify your take profit as well, right? Because if we do see uh, strong PCE data and soft unemployment claims, this combination of data is likely to create very strong demand for the US dollar. So that means dollar index could potentially reverse and bounce higher quite strongly, right? So do take note of that. All right, okay, so that's how we've identified the first support, where I see the next major support for the dollar index is around this pullback support level here. Right, so roughly just trying to get the body of the candle here. So as you can see, 102.96 would be the next major support for the dollar index. Right, so you can see price bouncing off this level here on 24th of January, then again on 31st of January, as well as 2nd of Feb. So you can see quite clearly, this is indeed a significant pullback level, which is why we've identified it as the second support. Right, and I believe if we run a Fibonacci retracement here, from this swing low here on 20th of December, going up to the high here on 14th of Feb, we can see, okay, none of the Fibonacci retracement levels align well with the support. So in this case, I would not force the Fibonacci level. I would not force any support areas or levels onto the Fibonacci, right? If the Fibonacci retracements do not line up with the support levels that we had identified earlier, that is fine, right? Do not force a Fibonacci level onto a particular support, right? You should always look for the major support first, and then if the Fibonacci retracement does indeed align very well with our previously defined support levels or resistance levels, then yes, then we'll definitely use the Fibonacci retracement. But in this case, you could see none of them lined up well. Okay, with regards to resistance, when I look across this price level here, right, at 104 the 13, this does look like to be it is even an overlap, right? I can even uh label this as an overlap resistance level, right, at 104.18. So why is that the case? Because when you see price pulling back here in mid-February, it found support at 104.18 from mid-February till from 15th of February till the 20th of February. This level here functioned as a pullback support before finally breaking lower. And once it broke lower, this pullback support could then potentially function as a resistance. So as price retraced higher here on 21st of February, it failed to break above this level, pulled back. And again, yesterday, it tried to break above this level once more, but it failed and reversed to drop lower. So this creates an overlap resistance level, which is what we're using to identify as the first resistance. All right. Similarly, when it comes to the second resistance, I would see probably this pullback support level here is not the strongest resistance level, right? Do take note this level here, 104.44 is probably not the strongest resistance level, but you can see when price came back up, fell quite strongly on 15th of February, it tried to retrace higher, but generally it failed to break above 104.43 convincingly over this period. So I would identify 104.43 as the second resistance, first resistance at 104.18, right? There's also probably a chance to run a Fibonacci retracement here from this high on 14th of Feb going down to the low on 22nd of Feb. In this case, we can see that the 50% and 61% retracement levels aligned very well with the first and second resistance. So in this case, in this type of scenario, right, I'm definitely going to keep the Fibonacci retracements at 50 and 61.8%. As you can see, they line up pretty well with the first and second resistance, right? So let's just say hypothetically later today at 1:30 p.m. GMT time, we see PCE index coming in hotter than expected. We also see unemployment claims coming lower than their forecast. That that type of situation is likely to create a very strong bullish, is likely to cause a lot of strong demand for the US dollar. So basically, that set of data could likely have a strong bullish impact, and that means we could see dollar index bounce off of, well, I don't know if it's going to reach all the way down towards 103.67, but we are likely to see the dollar index reverse and experience a strong short-term bounce. And should price actually reverse and head higher, and if I go in long on that position, I'll be looking to target a suitable take profit at in the region of the first resistance. So anywhere in the region of 104.10 to 104.20 is where I would identify a potential take profit should we see the dollar index reverse and bounce higher, right? So do take note how the data today could impact the direction of the dollar index, and naturally that of course would then translate to the other currency pairs as well, right? So do take note, these are the key support and resistance levels for the dollar index on the 4-hour time frame. And also take note that today's data at 1:30 p.m. GMT time is more than likely to impact the direction of the dollar index. So we could see a set of data that could reverse the direction of the dollar index. And should that happen, I would be targeting the region of the first resistance. That would be between 104.10 and 104.20 as a potential or as a suitable take profit zone for any long dollar positions. All right, okay. With that, then I'll move on over to the euro. So of course, if you're seeing the dollar index pull back since middle of February, then of course we're going to see the euro rise pretty strongly over the same period, right? This is what we expect, right? So previously, when we saw the dollar rising strongly in the first 6 weeks of 2024, naturally we are going to see the euro fall over the same period, right? You can see this is a pretty decent bearish channel, right? If we look at here, all right, of course, this part, the first part here we saw in December was a very strong move down, but generally after that, price did trade within this bearish channel, right? Over here, right? So after price made this initial drop down, then from 3rd of January onwards, you can see that the euro was trading in a strong bearish channel. And the channel also helped us to identify potential reversal opportunities, right? So when you see, when we do the analysis on a daily and 4-hour time frame, we're trying to capture the longer term trend of this currency pair or any instrument. And when we do that, we are able to identify chart patterns as well. And then combining the chart patterns with the Ichimoku cloud helps us to identify potential reversals, right? So similarly, as price is rising up, okay, the first time this channel wasn't formed because at this point here, there's no upper trend line of the channel, there's no lower trend line of the channel, right? But as price comes up here, the Ichimoku cloud would have suggested potential resistance area, and as price reversed to drop lower, we would have looked for a short opportunity at this point. Similarly, when price retraces higher once more, coming close to the Ichimoku cloud, once again, after price reverses, even if you take the second candle, right, you can take so you can see the first candle here closing in red on 23rd of Jan, after it comes close to the Ichimoku cloud or the bearish Ichimoku cloud. So even if you open on the second candle, here, which would have been about 1.0880, let's say, in price dropped as low as 1.0820. So we still had an opportunity to make about at least 60 pips or so, right? So you can see that by trying to do the analysis on a slightly higher time frame, such as the 4-hour time frame, we can identify key chart patterns and trends. And then, of course, you can zoom in into the lower time frames, 1 minute, 1 hour, 30 minutes, 15 minutes, right? And fine tune the analysis, right? Similarly here, so when price comes up to the second time here on 24th of Jan, you can see this time here, price reacts of 1.0930 and reverses to go lower. So at this point here, we are able to draw the descending trend line, right? We're able to draw the descending trend line. And once again, we see price fail to break above the bearish Ichimoku cloud. So as price is reversing, we can initiate a short position as here, over here as well, because it presents a high probability bearish reversal. Then over here on 2nd of Feb, this time we have seen the trend line already been formed. You can see price runs into resistance at exactly the trend line. Price did break above the bearish Ichimoku cloud, but because we had the trend line already established by this point, we would have seen that we would have used this trend line as well to identify a major resistance. And as price reversed and dropped under the bearish Ichimoku cloud, so even from about 1.0850, right, this would have signaled to us a potential short opportunity. So for even from going from about 1.0850 and dropping here the next candle to about 1.0780, right? That's about at least 70 pips again once more, right? So by being able to identify chart patterns and combining it with other analysis such as or other indicators such as the bearish Ichimoku cloud, it helps us to identify uh, uh, high probability setups, right? So, okay, so with that, going to get rid of this bearish Ichimoku cloud, and you can see here previously the bearish Ichimoku cloud uh, offered resistance or acted as resistance for price as it rose up. And similarly here you can see on well yesterday the bullish Ichimoku cloud offering support, right? So you can see the cloud does offer strong support as well. And when you see price reverse of the cloud, you could even have entered at about 1.0820, right? And this was a bit of short term, more of a shorter term play, probably capturing about 20 to 30 pips if you had got it at a pretty decent price. Yeah. So you can see how the cloud can offer support level as well. One thing to note, right, there was a strong uptrend, ascending trend line for the euro, which started on 14th of Feb. And it does look like on Tuesday, this trend line has been broken. Price is trying to climb back above this previous ascending trend line. But do take note now that price is broken underneath it. This trend line here could potentially function as uh, a resistance level as well. Right, do take note now that price is broken below ascending trend line, which was acting as support. This level here, or this trend line here, could now potentially function as resistance. And do take note, there's a pretty strong resistance level around here as well that's marked by the ascending trend line. Right, okay. So in terms of resistances and support, also see a pretty decent pullback resistance level here at 1.0858, right? You can see here, of course, you can see this wick here on 22nd of February going well beyond the resistance, but generally you can see on 22nd of February, 26th Tuesday, as well as on Wednesday, right? Price has failed to break above this pullback resistance, so I'm still more inclined to keep it on. And also you can see that the intersection here with the first resistance and the ascending trend line is likely to uh, uh, present itself as a strong barrier to further price movement as well. Right, the second major resistance for the euro I see is at this pullback resistance level here, right, which is at 1.0890. Right, so this is where I would identify the second resistance. Now for support, we can see price has made a nice overlap support here at 1.0797, right? Previously, this level functioned as a resistance back on 12th of February. Prices were retracing higher, but it ran into resistance in the bearish Ichimoku cloud and then proceeded to drop lower. After it broke above this level on 20th of February, as prices pulled back, it found support here, and when it did find support at 1.0797 and reversed to bounce higher, it creates an overlap support level. So what was previously a resistance has now turned into a support, and that's why I'm going to use it to identify it as the first support, which is a key overlap support where prices has rebounded off yesterday as well, right? So do take note, this is how we can do the analysis to find uh, strong support levels, right? So as price bounced off this level at 1.0797, not only did the cloud offer strong support. We also see that this was previously a overlap support level, right? With price bouncing off this level once on 21st of February. So as price bounced off yesterday, this should also signal to us a potential bullish entry or bullish reversal for price. And where we would target a suitable take profit would be in the region of 1.0858. So let's just say hypothetically we saw prices reverse off, because we saw price already reverse off this level once on 21st of February, and yesterday with price bouncing off again. So let's just say hypothetically we got in, let's just say 1.0810. Right, so at 1.0810, I'll be looking to target the vicinity of 1.0850, for example. So that is at least a pretty decent 40 pip profit should price reach 108.50, right? So we're quite close now, right? Actually, you can see the top of the wick already went past 108.50. So that 40 pip target would have been reached already. So you can see it's quite important to identify major support and resistance levels because they help us to identify buying opportunities for support. And as price is rising towards the resistance, it helps us to identify suitable take profit for the long position. Similarly, when price reacts off this pullback resistance level here and starts to drop lower, and especially after it has crossed this ascending trend line, it signals a potential bearish move. So that means I'll be looking to or short the euro at about 1.0839, maybe 1.0835, and I will place my stop loss slightly above the resistance here to give myself a little bit of buffer. And as price is falling, because I know this is already a pretty significant overlap level, I would be using this level here at 1.0797 to help me identify a suitable take profit. So let's just say I got it in at 1.0830, right? I got in here at 1.0830 after price failed to break above this pullback resistance and also breaking this previous ascending trend line. And as price is falling, I open a short position at 1.0830. And where would I identify the suitable take profit? Would be this in the region of this overlap support here. So you can see price has already bounced off this level once. Perhaps it's going to bounce off again. So I would identify at least 1.08 around the region of 1.0800. So that means at least we can target 25 to 30 pips. So not too bad for an like intraday trade, right? Right. Okay. So this is what we have. Second support for the euro Um, this would be, maybe I'll use the Fibonacci retracement to help me if there's anything here. So let's see, started the retracement here from 14th of February going up to the high on the 22nd. We can see that the 50% Fibonacci retracement aligns quite well with the first support. That's great. And we can also see 61% line up quite well with this little pullback here. So I'm quite likely going to use this level here and 1.0761 to identify my second support. Right. Okay. So that means should we see uh demand for the US dollar pick up, right? When we see if we see the euro reversing once more around this region here of 1.0850 and it starts to drop, right? So if you decide to go short on the euro because we see data that suggests strong demand for the US dollar, that means I would target the region of the first support as my take profit. So let's just say prices could reverse at about 1.0840, right? Because we see strong data which is going to create demand for the US dollar. So that means if demand for the US dollar picks up, the euro is likely to fall. So if we see that happen, and let's just say we decide to open a short position at about 1.0840 or 1.0835, I would then be looking to target my take profit in the vicinity of the first support, which is at 1.0797, right? So do take note how the data could drive the direction of the euro, of course, and how we can use the resistance and support levels to help us identify suitable take profits as well as stop loss levels here. So if you do decide to short the euro at about 1.0840 or 1.0835, I would take I would set my stop loss at a level that's probably about 10 pips above the first resistance. The reason I do that is so that to give us a little bit of a buffer. If we place our resistance at if we place our stop loss at exactly the resistance level, right, and when you see price actions such as this, the wicks like briefly breaking above it, we are going to get stopped out unnecessarily. However, if we place the stop loss at about 10 pips above that resistance level, it gives us that little bit of buffer and allows us to stay in the trade. So in this case, you can see here, the first resistance is at 1.0858. The top of this wick here is at 1.0865. So if I placed 12 pip, if I place my stop loss 12 pips above the first resistance, that would mean my stop loss is at 1.0870, right? So the stop loss at 1.0870 is about a 4 to 5 pip buffer just above the top of this wick. So that gives me sufficient confidence that price is not going to might not reach this level here. And it also means that I do not have a very wide stop loss, right? So I do not wish to keep a very wide stop loss. I'm identifying a suitable stop loss level, which is about, uh, in this case, 4 to 5 pips, but maybe that's a bit close. So perhaps we would put it as 10 pips here, at the top of this wick, so that you would place it at 1.0875. Right? So that's how we try and identify suitable stop loss levels as well. Right? Okay. If not, then I'll move on over to um the pound. And then okay, the pound and euro is very similar, right? In terms of price action, right? You can see they share a very similar market structure, right? As you can see, rising strongly, pulling back, generally rising strongly, pulling back as well. So the analysis, what I did for the euro is going to be very similar for the pound, right? So let's try find something different. So let's look at dollar yen, right? Okay, so today, this morning during the Asia session today, we had a board member from the Bank of Japan who called for an end to Japan's ultra loose monetary policy action, right? They are the only central bank to have kept this key policy rate at negative 0.1% throughout the high inflationary period. And because inflation in Japan is inching closer towards its target of 2%, this board member has decided to uh, call an end for this ultra loose monetary policy, which is why we saw demand for the Japanese yen pick up. So when demand for the Japanese yen picks up, that means currency pairs like the dollar yen is going to fall. So which is what we saw today, right? So this is I'm on GMT time, by the way. So this was at 2200 GMT time. So that was during the Asia session today, early morning Asia session. So the dollar yen going from a 150.65, dropping to as low as 149.65. So like dropping almost 100 pips, right? So you can see how unscheduled comments and statements by various board members from major central banks can also have a big impact on the direction or the demand of that particular currency, right? So this was an unscheduled announcement, and which may have caught many traders off guard, right? Because if you had been long the dollar yen, right? Perhaps you are long the dollar yen overnight, but because of this unscheduled news, which perhaps we were not prepared for, we may have already unfortunately been stopped out, or we may be riding a losing position, right? So it's quite this sort of events that took place during the Asia session, like this unscheduled announcement, right, is something that we can't really prepare for, right? It just catches us off guard, which may have caught a few traders off guard earlier this morning as well. Okay, with that, let's try and do the analysis for the dollar yen. I'm on the 4-hour time frame. So when I look across this price level here at 150.77, this is clearly signaling to me that this is a strong pullback resistance level because price has failed to break above this level since the 13th of February, right? And if I zoom out a little bit, okay, now there's no other level I can reference. So in general, the first resistance for dollar yen is going to be at 150.80. Now, oops, not sell first resistance. Now, why is this important as well? Right, as I can see, this is a resistance here. So that is important because then this level here, right, was previously a major, or it is still a major support level, right? If I look across, pull it back here, it's a major overlap support level, right? So prior to price falling down sharply today, we can see what is this? This is 149.74. Right. Previously, this level acted as resistance. Price failed to break above 149.75 back in November of 2023. So this level was functioning as a pullback resistance. But as price broke above this level last week, this uh, previously this previous pullback resistance could now potentially function as support, and it did quite clearly here on 15th of February, right? Obviously, of course, we can see the wick breaking below this level, but generally you can see the body of the 4-hour candle has stayed above this level. So when this sort of price action occurs, we know that okay, this is a strong support level, right? Now we know this is a strong overlap support level, and as price is rising higher, I can potentially uh enter a long position here and then target the vicinity of the first resistance as a potential take profit. Now, as prices pulls back once more on 19th Feb, it retraces a little bit higher. Then again on 20th of Feb, it retraces once more and goes higher. I can play the range, right? I can see dollar yen is ranging between the first support and first resistance, and I can try and do a suitable, try and find suitable strategies to play the range. So going long when prices bounce off the first support and exiting as it approaches the first resistance. And as it reverses, perhaps I will try and open a short position and try to capture the range. But as you can see, only the third time after it bounced off the first resistance, then that short position actually played out quite fruitfully. All right, okay, there's a question here as well. With the news impact Dow Jones? Uh, it may because when we have inflation coming in hotter than expected, that means the Federal Reserve is less inclined to cut interest rates early. So a lot of the uh, recent rise in equity markets since last December has been a combination of markets expecting aggressive interest rate cuts by the Fed, as well as strong earning seasons, which is currently going on, right? So in mid January onwards, till now, we have also seen strong earnings come in generally, which has also propelled equity markets. So the combination of anticipation of interest rate cuts since last December, plus earnings results currently going on, has propelled equity markets higher. But because we saw CPI data come in hotter than expected last week, right, that created an overnight pullback for equity markets. So should PCE index come in hotter than expected, we can likely expect US equity markets to pull back once more tonight as well. Right. So do take note, yes, this is quite likely to impact US equity markets as well. Because like I said, if inflation comes in hotter than expected, PCE data comes in hot, the Fed is less inclined to cut rates early. They're likely to keep them elevated at the current level, which is 5.25 to 5.5%. So that means we may see a short-term pullback in US equity markets if that were to happen. All right. Okay. Uh, with that, okay, let's go back to yen. All right. So these are the first major resistance and support levels for the dollar yen. Right. So should we see now that we know that first support at 149.74 is a major overlap support. And if we get the data today that suggests that shows us PCE price index is increasing, unemployment claims comes in lower than expected. So both of this type of scenario would create strong demand for the dollar. Then we are likely to see the dollar yen push up again. So if that were to happen, I would initiate a long position on dollar yen. And where I would identify a suitable stop loss would probably be a level that's just slightly below uh, this pullback support level here. So you can see the bottom of this wick here on 15th of February dropping to 149.50, and you can see this wick, current wick as well, coming quite close here. So perhaps a suitable place to identify the stop loss would be probably, let's just say, about 10 pips from the bottom of this wick, so 149.40, right? Or let's just say let's give ourselves 15 pips. We'll give ourselves a little bit more leeway. Just hypothetically, we put it at 149.35. And as price reverses off the first support and is rising higher, I would then target the region of the first resistance as a potential or as a suitable take profit level. So that means I'll be looking at the region of 150.80 as a potential take profit level should price really reverse off the first support and continue to move higher. All right, okay. Now what about second resistance and second support? Where could we potentially where could we find those or identify those? If we zoom out a little bit on the dollar yen and go back to see where price was trading in November of 2023, this pullback resistance level here, right, at 151.31 is where I would identify the second resistance. Right, as you can see, price failing to break above this level here in mid-November, right? Price retraced a little bit, but it failed to break above and then dropped quite sharply. So this tells me that this is the next resistance level, should first resistance be broken. All right. Okay, then what about the next support level? Could be over here. This is a pretty decent pullback level here as well. Right, just let me see. This is at 148.80, right? So previously, back on 19th of Jan and 23rd of Jan, price failed to break above 148.80. And even again in early February, price failed to break above this level. So this was clearly telling us this was a pullback resistance level. And as price broke above it, this pullback resistance level could now potentially function as a support. So that's why I'm identifying it as the second support at 148.80. Right, could there be any Fibonacci retracements? Let's see, I think there may be one from here to here, right? You can see the trend line has captured the market structure quite well. If I were to try it from down here, this swing low, let me see if I should do it from down here or not. You can see the trend line here, the diagonal blue line here has not captured the market structure quite well. We can see price deviating quite strongly away from the trend line and over here. But if I were to start my retracement from 1st of February, and we can see that the trend line has captured the market structure much better. So I'm more inclined to draw the Fibonacci retracement from here and then use the 23 and 38% retracement levels to help me identify, to add significance to the supports. So I'm going to keep 23 and 38. I'm even going to keep 61. I'll show you why. Right, so you can see here there's another strong pullback support level here at 147.70. So should for let's just say hypothetically the dollar yen continues to drop lower, breaking through first support, second support, where the next support for the dollar yen would be it would be at 147.70, which is pullback support level here that occurred on the 7th of February, which is also a level that aligns very well with the 61.8% Fibonacci retracement. All right, there's a question here as well. We saw a huge $30 action in gold when CPI data came higher than expected in the last release. Market sentiment changed completely. Do you expect similar price action today with the release of PCE data? All right, we can expect if we see hotter than expected PCE data, then definitely we're going to see gold prices drop as well. Now, is it going to be as large as $30 as what we saw during CPI? I cannot guarantee that's going to happen, but yes, we can. What I can tell you is going to have a pretty big impact. So with that, let's go over onto gold and let's do the analysis on gold because I think that's really very suitable to where your question is coming from, right? We can also see how prices react to CPI data came out. When did it come out? I think it came out, was it Tuesday? CPI. Just let me see when was the exact date. I believe it was. What? Just want to make sure I get the right date so I can then we can do the analysis as well. Okay, let's see. This week, so I believe it was. Right, okay, CPI data came in on Tuesday, 13th of February, right? So that's the date where it came in. It was released at 12:30 p.m. GMT time. So let's go over to that date. So, right, oh yes, of course, can't miss this candle here. So CPI data was released on 13th of February. It dropped at 12:30 p.m. GMT time. Right, so let's move on over to the 30-minute time frame and then scoot on over to that period here. So here we go. This is it, right? So you can see yes, gold prices was trading around $20.30 at $2,000 and $2,030 per ounce, and it swiftly dropped as low as 1,990. So essentially, we saw a $40 drop in gold prices that day. Now, I cannot guarantee or tell you that we're going to see a similar drop in terms of dollar terms should we see PCE data come in higher than expected. But definitely, you're going to see the uh, price of gold plunge quite strongly if PCE data does come in stronger than expected. Now, with that, let's try and do the analysis and try and identify the resistance and support levels so that we can identify potential take profit levels, entry levels as well. All right, okay, there's another question here. All right, Bitcoin reached resistance lines yesterday. Do you think it's going to go higher? All right, okay, I'll come to Bitcoin after this. I don't generally trade Bitcoin, but it does look like there is very strong bullish sentiment as well as price action for it. So it's pulling up a lot of the coins in the crypto space, right? We're seeing Bitcoin, Ethereum climbing higher, and it does look like Bitcoin does really want to look like touching its all-time high at 64,000 again, right? So we'll come to that after gold. All right, great. Okay, great to see the questions coming in, and so that we can, we can do the analysis on stuff on our, or not stuff, but instruments that are really moving, right? So Bitcoin is one of them. So we'll do that after gold. All right, okay. Coming back to Bitcoin, gold, right? 13th of February, CPI data came in hotter than expected. We saw gold prices plunge $40, right? So is that going to happen again? I'm not sure whether we're going to see the same dollar amount drop, but we can expect prices to drop quite strongly should PCE data come in higher than expected. Now, coming to that, the first resistance for gold prices, right? I see it here, which is at $2,042 per ounce, right? Why is that? Because we see price making a little running to a little bit of resistance here, 4th of February. then again on 7th of February, and then once again last Friday coming close to this level before reversing. So quite clearly, this is the first resistance for gold. Second resistance here is this multi-swing high here that's occurred since 12th of January, one multi-swing high here, and the second one here on 1st of February. Clearly, we can see quite clearly that this is indeed a major resistance level. Now, moving on over to support. This looks like a near-term support level for gold prices here, right? So since Monday this week's, so I'll probably like to identify this as perhaps a intermediate support for now. I think we can also do a Fibonacci retracement from here, 14th of February up to 23rd. We can see that this intermediate support here aligns quite well with the 23% Fibonacci retracement. Perhaps I'll identify this support as this level as the first support. And another pullback that I see quite strong is around here where the 38.2% Fibonacci retracement is. We can see price bouncing off this level here, 21st of February and 23rd of February as well. Okay, second support here. Let's just keep 23 and 38.2% retracements. We don't need the rest. Right. Okay. So going back to the question, will we see another $30, $40 drop in gold prices? I really don't know, but let's just say, right, gold prices are currently trading about $2,000 and 30 cents per ounce. So that means another $30 drop would mean price is going to come down to this region here at $2,000, right? $2,000 per ounce. Could we see that drop occur? Maybe it could, right? So that means price has got to break through the first support and second support as well. And if the data is really indeed strong, then we may see that happen. So take note, if we were to see another $30 drop in price of gold, that means it's going to come all the way down here to this pullback support, which happens to sit quite nicely with this pullback support here that occurred on 16th of February. All right, okay, so these are the key support and resistance levels for gold. With that, let's move on over to Bitcoin. So we'll wrap up today's session with Bitcoin. Right, so let's see. With that, let's just start with the weekly time frame first to see how strongly Bitcoin has risen since, well, okay, not only since last January, but also since the beginning of the year, and also in the last quarter of 2023. So you can see the Bitcoin's all-time high, right, is this level at 69,000 here. Right, this is the all-time high. It touched on this level here, but in terms of the daily close, the highest daily close for Bitcoin is at the highest daily close, right? We're talking about daily closes here, not the absolute point. The highest daily close for Bitcoin is about 67,500. So you can see, right, this is a major resistance level for Bitcoin, right? Where could be another resistance level. Probably use this here as the second resistance. First resistance, maybe I see a pretty decent overlap level here, right? You can see price running through resistance here, 25th of October 2021, then again on 2nd November, and also finding support here on 12th of November. So this overlap looks pretty significant. So I'm going to use that as my first resistance, which brings me to where price has stalled quite recently, right? Since yesterday, price has failed to break above this first resistance here. So when we do our analysis on a higher time frame, right, we are able to try and identify potential resistance areas. And as price was rising strongly over the last few days, right? If you had done the analysis on a daily and weekly time frame, you may have probably spotted these resistance levels here, and then we would have used these resistance levels to help us identify a potential take profit zones as prices were rising strongly over the last few days, right? Definitely, if I had spotted this first resistance at 63,700, definitely I would have identified a suitable take profit within the vicinity of $63,000 for Bitcoin. Now, could Bitcoin go higher? It most certainly could, right? Okay, let me just pull up stochastics and see on the monthly time frame as well. Right, okay, you can see quite clearly the yeah, do take note, although stochastic is indicating overbought conditions on the monthly time frame as well, that doesn't mean it's going to reverse anytime soon, because as I said, sentiment is really strong now. We may see this move, Bitcoin continue to climb higher, and I suspect it may even reach 67,000 once more again, right? Now, whether it continues to stay elevated and move higher, I'm not too sure that's going to continue to happen. But I do think there is more upside to Bitcoin than there is a chance for maybe a potential strong pullback, right? So do take note, we are in the region of strong resistances, right? You can see price making significant resistance here, a significant swing high here on 8th of November 2021. This is a significant swing high. We also see another significant swing high that took place on 29th of March as well. When it comes to support, right, I don't see any near-term support for uh, Bitcoin, right, where I would see in terms of price action where the next support could be would probably, okay, let me just tidy up all this first. Let me get rid of this annotations. Okay, whereas maybe a suitable support level for Bitcoin perhaps maybe is around 60,000, right? We see price finding a little bit of support here in October, November 2021, then running into a little bit of resistance here in November, towards the end of November as well, creating an overlap. So perhaps this overlap here could be the next region of support for Bitcoin at 60,000. I'm not very convinced confident of this support level, but yeah, it's good to see that we do see a pretty decent overlap here. So maybe 60,000 is indeed the next support level for Bitcoin, and the next support level may be around here, this pullback level here that occurred on 26th of November 2021. So I think this is how I would identify the major support and resistance levels for Bitcoin on a daily time frame. Um, Yeah, so right, so these are the key levels here. Even on daily, weekly, and monthly, stochastics is indicating overbought conditions, but we don't just blindly short any instrument just because the stochastic indicates overbought conditions, right? There are a lot of factors, other factors at play. So do take note, there's a strong upside for Bitcoin, still a strong upside for Bitcoin and all the other cryptocurrencies. All right, so before we end today's webinar, I'm just going to launch a poll. Truly appreciate it if you guys can give your feedback in today's session. Thank you so much for the kind words, Toph. Glad to have done this session with you guys, right? And I hope it's been a great session, great webinar for all of you. Yeah. So do take note of what's coming up later today, and also do look out for all other webinars brought to you by IronFX as well. Right. So before I end the poll, right, we're just gonna end the poll now. Right, okay, so I've ended the poll. So just maybe quickly going back to the slides. So do take note, right? So PCE price index unemployment claims coming up at 1:30 p.m. GMT time. We saw CPI data come in hotter than expected 2 weeks ago, and PPI as well. We see January's forecast for PCE growing quite strongly, right? When you look at core PCE, it came in at 0.2% in December. It's expected to grow 0.4%. Not only is it increasing, trending higher, it's also the highest monthly gain since February of 2023. And when we look at PCE on a headline PCE on a monthly basis, even that seems to be increasing, right? December's data growing 0.2% month over month, and January's forecast is looking at 0.3% month over month as well. So it's especially after seeing stronger CPI and PPI data, we are also inclined to think that PCE is going to come in hot as well. So do take note of that. And unemployment claims, how can we interpret unemployment claims? If okay, the forecast for this week is 209,000. So if the actual claims results comes in more than 209,000, this is typically going to be bearish for the US dollar. So that means these currency pairs and gold prices are likely to rise. Conversely, if claims comes in lower than 209,000, this is typically bullish for the US dollar, and that means all these currency pairs plus gold are likely to fall. All right. So, okay, do keep an eye out for tonight's events. And thank you all for tuning in today. And thank you very much for the kind words. And I look forward to seeing you at the next webinar. All right. Thanks, everyone. Take care and have a great trading week.